I mean, this is the thing. Not everything works. People test new business models. They see if it. Some business models just don't work, no matter how much
Yeah.
you want them to.
If you start working right now, right?
Yeah.
Like you'd be fine, basically.
For a very long time. Invest in those experiences earlier, because that's like those experiences when you're young just shape your, they kind of shape your personality.
Yeah.
Yeah, and exposes you to a new network, hopefully.
Hey guys, welcome back to Financially Incorrect. I am your host, Barrack. And remember, this is a podcast proudly sponsored by FXpesa. If you'd like to understand or learn more about trading, please check out all the links in the description box. Also, they do offer some classes physically at some of their locations. I forget them. I will put them in a thing, in those caption things here on YouTube. But yeah, they do have they do offer physical classes at some of their locations as well. If you'd also like to open, you can either open a trading account or a demo account to practice. Again, all those links are in the description box. Check out FXpesa. We have just concluded, I believe this episode is going out in May, so we've just concluded April, which was for us, well, not for us, for the whole world, Autism Awareness Month. So we do hope that you were able to, take someone out for coffee or just give them a shout out. Anyone who's a caregiver or a parent to a child or anyone who has autism. We are trying to get a person to speak to around finances and autism. I think that episode's going to come up in the month of May at some point, so we'll see how that goes. But yeah, today I'm really looking forward to this conversation. We've been speaking for about half an hour, but I have Mr. Chad Larson, who's the CEO of KopoKopo Inc. And yeah, I'm very happy to have him here. He has his own podcast, right? Running.
It's going to be coming out.
It's coming out soon. His podcast is coming out soon, so be on the lookout for that. But we're going to talk about everything KopoKopo, everything money, his journey, relocating from the States to here. What's that look like? We're going to touch a bit about his white privilege or lack thereof, or his understanding of it. It's going to be a fun conversation. So welcome to Financially Incorrect.
Good to be here.
Yeah?
Thanks.
Are you nervous at all?
Yeah, of course.
Yeah?
Yeah, you've got a big audience, yeah? You ask tough questions. Sometimes you get haters in the comments.
Yeah. No, that I do. Yeah, that I do. That I shadow of a doubt.
Let's do it.
Yeah, let's get it done, right? So, tell us a little bit about yourself, actually, before I even start my questions. I mean, what do you think makes up who you are? Yeah. And a bit about KopoKopo as well. Yeah.
Sure. Yeah. I mean, so I'd say that I've learned, I guess, in my career, like the thing I do best is run lending businesses. I spent time in banking in the U.S. and in Australia, and then I moved from that to M-Kopa Solar, which was financing solar power for Mashinani households on credit. So there was a huge credit management component to the results of that business, and it's the same now with KopoKopo. So if I had to describe what I do, that's what I do.
Okay. You've now been CEO for 5 years now?
Yeah, almost 5 years, yeah.
What's that journey been like for you, running?
Yeah, I mean, so when I joined KopoKopo as CEO, the business had been around for a long time, and crucially, the technology was really mature and useful, and lots of businesses in Kenya were using it loyally, yeah? So, so the technology was already great. I inherited was already like the great bones of a business. And then I'd say over the last 4 or 5 years, we've sort of kind of turned it more into like a business where it's like we're really thinking about where we're spending our money and where the return's going to be. And crucially, we've just expanded the lending business.
Yeah.
So that's been my kind of signature on that.
Maybe you can tell me a little bit about, because like I mentioned before before we were shooting, my wife, business is run on KopoKopo, and you were talking about how you have such a wide range of customers, from like the Javas who are using your technology to kiosks to people who are running cloud kitchens and things like that.
Yes.
I guess I wanted to ask you a little bit about the process of giving unsecured loans to businesses, and what's the thinking behind that, and how do you mitigate the risks that you run?
Right. Yeah. So I mean, I'd say this for the technology, it's like there's lots of different levels. At the biggest level, like you mentioned, Java uses our software. They're using our full API integrations into their cash register. et cetera, like the full-blown KopoKopo experience. But then as you get all the way down to like a small shop, they might be using the Android app, and then a kiosk, they might even be using USSD just on a Nokia. Yeah. So there's a lot of different levels of the solution. But the lending hypothesis is based on the fact that we know the transactions of the business, especially their M-Pesa transactions, which are significant. So we can make a good underwriting decision around lending to this business. And then we also have the ability to deduct at source from the customer, from the repayments that come to that customer's business to repay the loan on some agreed percentage. So it gives us big advantages in lending.
Yeah.
But I'd say most of confidence in lending is doing it, seeing what happens, and then if it's working, doing more of it. If it's not working, tweaking things. So so I guess the confidence to continue lending is that we've been lending and it's working.
Okay. And I mean, you said that when you're describing yourself and your business acumen, you said that you've really learned how to run lending businesses. I wanted to ask you maybe a little bit around the consciousness of, I guess, borrowing, because it is a consumer who's taking from you.
Yeah.
What would you say is the most intriguing thing around the consciousness of borrowing money?
Yeah, I mean, what I find fascinating about lending, especially at this level, is to get good at it. It's a combination of like the numbers. You got to be really good with the data, But then like there's a huge psychology component, right, of the borrower, like how they will think about this obligation. Will they take it seriously? How does it compare to other obligations they have? They probably have all sorts of other obligations. The baby mom is chasing them for some money, whatever. Like, how do they prioritize this? Do they see this? And that, I think, is like, at KopoKopo, like, there's still a huge human component in the early days of lending to a customer, where there's phone calls or even visits, where we're really trying to get to the bottom of this person's kind of how they think about borrowing and how they think about repaying KopoKopo specifically.
Yeah.
So, like, to me, that's the fun part, because like you can't just have data, like guys that just crunch numbers figure out lending. Like, you also need people who understand psychology.
Yeah.
So I'd say a lot of my staff are like kind of amateur psychologists. They don't realize it, but
Yeah.
Okay.
Yeah. What's the largest sum of money that I guess in your tenure as CEO that a business has taken, and you've loaned them money, they've been like, this is fantastic, this is my holiday money,
and run off with it?
Yeah,
10 million shillings.
10 million shillings.
Yeah.
That's the maximum amount that you guys.
That's the biggest single loss that we have. Yeah, in the loan book, where we just basically didn't get anything.
And what happened there? Did the person just close shop within a day?
Kind of, yeah. I mean, it's a story. I won't name the names. It's like you might recognize the name of the business. It's a business that failed in the last few years.
Yeah.
And one of their last acts was to really trying to figure out where they could get credit.
Yeah.
And we happened to do all their processing of payments, so they had the ability to borrow from us. But it was like a move of desperation. They weren't borrowing to fund their working capital or things like that.
Oh my goodness. Okay. So what's that?
So we're trying to chase that one. We're trying to chase with like an insolvency petition, but I don't think there's any money left. There's no assets. In most cases, it's like you're not going to find much. Unless somehow that business owned a bunch of land or things like that you can still grab, but it's not the case usually.
So what options that leave you with now? Do you just take a 10 million shilling loss?
I mean, that's so. If you're in the lending business, you have to be able to stomach that. It's like it's all about your pricing, because in that month, we're lending about 600 million a month, right? So like in that month, you could say you had the 10 million loss, but maybe you had the other 590 that kind of, I mean, there'll be other losses, but like, and you make sure you price the interest on the ones that, basically the part of the portfolio that pays, so you can stomach a 10 million loss within your margins. Like, that is the lending business. It's pricing.
So you don't get like
it's pricing the risk correctly.
That. Yeah.
No, we don't want insurance. Like, we're the ones that are good at it. Like we want to do it ourselves. Yeah.
Yeah.
Like, you buy insurance for stuff when you don't feel you have control over it. Like you buy fire insurance or whatever, but like we have control over our credit. So,
but if someone's taking off with your money.
Yeah. I mean, it is part of the business, though.
Yeah.
I mean, I don't want it to happen, but realistically,
it's
going to happen again. And at some point, it'll probably be up bigger than 10 million.
Yeah.
Okay.
So, that is just.
Yeah. I mean, it's a different kind of business. It takes like a certain, I don't know, I guess stomach for risk, but I don't think I have some huge risk appetite. It's just more like I'm convinced by the data. Like, we've done this lending, you can see how it performs.
Yeah.
So I'm confident to do more of it in the future.
Yeah.
Because I can see that it makes money.
Okay.
Yeah.
Let's get into your money journey now, right? So born and raised in the States, right?
Yeah, that's right.
What kind of money situation did you grow up in? Were you guys well off? Were you very well off, or just middle class family?
We were sort of like, I'd say middle class to sort of upperish middle class, until we were broke, because like my father got completely overextended on some like investments and things, and like we lost the house. We got kicked out of the house. My parents got divorced. This is when I was like 11 or 12. So, and then my mom and I moved into just like a crappy apartment, and then but before that we were like reasonably well off, like firmly American middle class, which is very well off by global standards, right?
Okay. And so by the time that the separation, your parents are divorcing, did you understand at the time that it was a money?
A little
thing?
bit.
Yeah.
I only kind of found out later, like the whole like story, what it was about. I was too young to.
Yeah, at that
time. To want to know. But I sort of knew it was about money. Yeah, I knew it was about money.
Yeah.
Yeah.
What did that have any impact at all on what you thought about money or what you felt about money at the time?
You know, I'd say the way it affected me most is like that. You know, my parents were just like they didn't have any money to kind of give me for like spending money, right? We were sort of in a middle class place that like other kids my age had spending money. So that's when I figured out that I wanted to start working and earning some money. And at the time, at age 12, in that state in America, there are certain jobs that you were allowed to do for money. You could work legally. So I started working legally at age 12, delivering newspapers. And then at age 14, working in restaurant kitchens, washing dishes, chopping vegetables. And then it just kind of went on from there. So I worked just so I could have the spending money, because like my friends would have the spending money from their parents, but mine were broke. So yeah. Okay. So I started working really early.
Yeah.
Yeah.
Did you have to change your because I know this because I guess I have some family that have lived in the States and grew up in the States, and for example, I know that the school wherever they live, they go to a particular school based on a district and based on the district that they're in, etc. So I'm wondering, did you have to change your school in any way? Did any other element of your life, the fundamental ones, I guess I know healthcare is super expensive for you guys, but in terms of school and your level of upbringing, so to speak, did that shift at all, or was it just that you weren't living in the house that you used to and you didn't have any spending money?
Yeah, I mean, we basically, when my parents split, my mom wanted me to be able to stay in the same school district. It was important to her for some reason. So she like found like the most affordable apartment that was in that district,
Yeah, but it didn't affect your schooling.
No.
So you stayed in the same school essentially.
Yeah.
Yeah.
Yeah, that's right.
Okay.
Yeah.
I mean, that's a really huge. I mean, I think
it's not really a heartbreaking story. It's
no,
just,
it's not
sort of
heartbreaking.
I don't know. It's like it's a broken home, but there's a million broken homes out there. It's not special, really.
No, I mean, I'm thinking about it from a Kenyan context, right? So, for example, if my folks, when I was growing up, my folks got divorced and they were affected financially, and I was going to a certain school, my school would completely change, right? And if now they were earning a lot less, or if it was one income, whatever the case, my school would completely change, which would mean my trajectory, among other things, completely changes. But I guess for you, the advantage.
I mean, I guess that's a miracle of the public schooling system in the U.S. Like, it is a pretty amazing thing. Like when I think about the schools I went to as a kid, and they were completely free. It was just, you just had to live in this area, and it's unbelievable. Like that, some of that public education in America is really a huge accomplishment.
Okay, let's talk about I guess going to college, right? Did you have to take? I know I don't know the true details of it, but I just hear a lot of Americans talking about student loans and how expensive they are.
Yeah,
how expensive colleges. Yeah.
Yeah, my parents were still broke then, so I paid for my college with student loans and working through the entire time as well.
Have you paid them off?
Yeah, I was lucky. I ended up at the time of the today people take on a lot more debt, but I ended up college with $20,000 of debt. It was terrifying. It's a lot of debt. This is in 1994 as well, right? So 20,000 was a lot more money back then.
Yeah.
And it would just seem like something I would be paying forever. But like I was lucky, I kind of fell into the job sort of on Wall Street in banking.
Okay.
And then I started making some decent money, and then I just at some point I was able to just pay it off like early and just get rid of it. So
Who did you work for at Wall
Bank
Street?
of America.
Bank of America.
Yeah.
Okay, so you get into Bank of America. How
Yeah.
much are they paying you at the time, and what are you doing with your money at that time?
Oh, like when I first started,
Yeah.
I was sort of I was just like an operations, like a clerk, you could
Yeah.
say. And that job paid $28,000 per annum. So I don't know if you convert that to monthly
we
shillings.
just leave it at USD.
Okay, should we leave it at
Yeah,
USD?
yeah,
Okay.
Yeah.
Yeah.
Okay, so and of that 28,000, what kind of lifestyle are you able to live? And what are you doing with your income? Are you saving it? Are you investing any of it? Yeah.
I mean, what's interesting, here's, I've thought about this question a lot because I'm thinking like the lifestyle I had on that money then. And then I think about Kenyans I know, especially the ones that work with me at KopoKopo, and like how they live. And like, I think at the time I was probably living the lifestyle that like a Kenyan today in Nairobi who's on like 70,000 a month is living. Like I'm in a bedsitter, like a small, we call it a studio apartment, but it's just like one room. It's, that it's a fair commute to the office, but I still have some money to go out. Like, I go out like a little bit with my colleagues. We can go get some drinks. Like 70,000 is good income, right? Like you could have some little extra spending money as like it was probably the equivalent lifestyle of that at the time of somebody in, a customer care position making 70 or 80,000 a month.
Yeah.
Shillings, yeah. Makes sense, yeah?
Yeah, that makes sense.
Was that too abstract, that translation?
No.
But that's what $28,000 a year
was sort of like, okay.
afforded in San Francisco at the time. Yeah.
So you're there for about what, 10 years, right?
10 years,
at
yeah.
Bank of America.
Yeah.
What's the career progression you get to there? And I mean, when do you start making? Do you ever get to a point where you're making about $100,000 a year?
Yeah, I mean, I was, I think I hit some huge strokes of luck in getting my foot in the door on something where some of the things I did well, which is like doing math in my head and like being able to like work with numbers with ease, like all of a sudden was really valued. So like within 3 years, I was making that kind of money that you mentioned, which is like, now that I look back, it seems unbelievably fast.
Yeah.
At the time, it seemed I couldn't wait. Like it just seemed like it was going to take forever to get to that kind of income, right? But like when I look back now, it was ridiculous. Yeah. I made too much money too early.
Why would you say that? I mean,
no, I'm just kidding.
Yeah,
no, I'm grateful. I mean, honestly, it's like
yeah.
part of that is how I was able to move to Kenya speculatively on a startup that was paying me no salary at the time. That was just it's like that savings from that time. So it allowed me to, I guess, do what I've done here as well.
Okay. Yeah. So at the time when you start earning good money, what are you doing with your money in that time? Are you still investing it? And is there a particular an example of a stroke of luck that you can give us that would sort of explain your trajectory in those 3 years from the 28,000 to above $100,000 in income?
Yeah. So at the time, I guess, first it's like as the income went up, I lived a little better, in like a better quality kind of apartment and whatnot, and went out to eat sushi more often and stuff like that, right? So part of it was spent, like a good part of it was spent, but but then as I was able to save more, I was super conservative with it. I always just put it in like government bonds for the most part, because I sort of worked in bonds, so I sort of knew that area. It was super safe, and I put it in like bonds of the U.S. government or parastatals of the U.S. government, like super safe. Partly because I always kind of thought the Wall Street thing could come to an end at any time, and I didn't want to lose that money. It was like so.
Yeah. Okay.
So I'm super conservative with it.
And then it did come to an end in 2008, and your tenure as well came to an end, right?
Yeah. I left banking. Yeah, that's right.
What was your thinking or decision behind? Yeah, I'm gonna leave now.
Well, I just had a baby, my first kid who's 18 now, and I just kind of like thought like I wanted to see if I could make a bunch of money saved up, and I thought I want to make a change of some kind, and so I thought about going to business school, and I thought, well, I'll take a year off and do my MBA, and I can always come back to Wall Street later if I want to, But then maybe I can see, and then that would give me more time to spend with my kid as well. Yeah. Because it was school was like lighter scheduled than Wall Street, so it was just that. It was just like I wanted to see if I wanted to make a change.
Okay. Was your wife working at the time as well?
Yeah. Yeah,
Okay.
she was. Yeah.
So in terms of because I'm assuming if you're saying you're gonna take a year off, means you have quite a bit of money.
Yeah, I was lucky.
Put away.
Yeah. I was lucky with
did
that.
she also have was she also gonna take a year off? Or was it just you and she was gonna keep working?
Well, we had our kids, so she was a full-time mom at that point, and
Yeah.
didn't want to return to work for many years. She that was
the
the
plan
intention.
was- okay.
That was the plan. Is
Yeah.
I was the breadwinner because she
Yeah.
wanted to be a full-time mom.
Yeah.
And she's actually only recently gone back to work now.
Okay.
In the last couple of years. So.
What was that? I mean, I know this was like you said 18 years ago, but what was that conversation like for you? Where, if she said, "Yeah, I'm gonna be a stay-at-home mom, and you're gonna be the full breadwinner," financially, was that pressure?
Yeah.
Yeah.
Yeah, I guess so. Yeah, but it also made sense. I don't know. It just yeah, I don't know. Yeah, we just sort of. I don't remember any specific conversation. It was just sort of always that was the deal.
Yeah.
Yeah, I don't know. Yeah,
Interesting. I'm trying
it's
to
like more traditional family, I suppose, right?
Yeah, and I'm trying to think about it, and I'm trying to look at if there's any differences in the nuances of a typical, I guess, an African man, black man, vis-a-vis
Yeah.
white man having the same conversations of, okay, you're going to take care of the family,
Yeah.
or is it any different? Does it feel
Because
the same?
here,
Yeah.
I mean, that would be like the default in many cases, right? I mean, there's other work,
Yeah.
but like that the wife and the mother wouldn't be expected to go take paid like salaried work with young children, or
I mean, I think it depends. I think. I mean, we've had people here sit and say, yeah. I mean, why would I be the only one contributing, and then later on get a divorce and then we're done.
Right.
And we've had other people who've been more traditionalists. We've had a lady as well who also said for her it's 50-50. Splitting the bills across, so it's a 50-50 income. Everyone
Right.
brings in what they bring in. Yeah.
yeah, interesting. Yeah, you know what I always found funny about Kenyan
Yeah.
married couples is they don't have joint accounts; that they keep their own accounts.
Do you not?
I always found that strange.
Do you not have an individual account?
No,
You don't have an individual account.
all our bank accounts are joint, both in the U.S. and in Kenya.
All your
All our bank accounts are joint. Yeah, there's no secret ones.
No, I don't even mean secret. No, I mean no. You're telling me
At least not on my side. Maybe
No.
my wife's gonna.
all your bank accounts. Are, so like right now,
Yes.
if we go down to Urban Eatery
Uh-huh.
and swipe,
My
your
wife
will
will
get
get
a
a text
notification and be
message.
like, "Oh, you're eating
Yeah.
at."
Oh, who are you with? What are you doing?
Yeah.
No, just kidding. Yeah, that's right.
What? All your accounts,
Yeah.
all of them.
Yeah. Yeah.
No, no.
Yeah.
And I'm asking this, and
I mean, other than like,
people are laughing.
other than like
like the
M-Pesa.
ones that are and no, the reason I'm asking is because I'm just like, what's happening? Like, and at what point do you make that decision? Because of course you've had your individual account
Yeah.
up until the point you get married. So do you go and close those and you're like, hey guys, move all of my money
It's
to this
in
place?
America. It's expected. It's like when you get married, you get a joint account. Like it's like your money is like
God.
it's sort of like it's joint property now. You don't have your own. I mean, I suppose you can have a budgeting conversation, but you don't keep separate accounts. I don't know. Like we just never thought any different. Like my parents always had joint accounts when they were married, and
That's
everybody's
why you guys get cleaned out. That's
yeah. It's strange,
you
eh?
guys get cleaned out when you get divorced because
Yeah.
I'm just like
Yeah.
and again, I'm not saying this from a secretive point of view. I'm just like, so even even like your own
You're
own,
fascinated
I'm
with
not
this.
only fascinated.
You're fascinated
I
with
cannot
this.
comprehend it. Like
Yeah.
even your own.
It somehow works.
Your own.
You can interview my wife on the podcast.
Yeah,
next
and
week
ask her,
see,
like, what's
see
happening?
what's going on. How does this
Yeah.
work? Do you
That
watch
is-
what he spends? Right.
Like that is something.
Do you know where this
I mean,
money's going?
does that actually bring complications in that? Not complications, but extra conversations in that sense. To be like, hey, I'm going to spend 10,000 shillings today on X and X and X and X.
Yeah.
Or do you find that it helps have, what do they say, more oversight and like a better budgeting execution plan?
I'm terrible at this stuff.
Yeah.
Like budgeting at the family level. I'm terrible at it.
Yeah.
I'm the worst one to ask for advice on that sort of thing. I guess we just trust each other not to like do crazy shit. Is that? Can I say the S word on the podcast?
No, I mean that's.
I apologize to
no,
the
that's,
sponsors. Yeah.
that's fine. I'm just like, I'm gonna come back to this because I that's just mind-boggling for me. But okay, that's really interesting. I don't know. I mean, I'm trying to think around my consciousness of, yes, I do have joint accounts with my wife, but I have my own as well. Like I have
Right.
my own. I have my individual account where it's my money, where if right now I went and I spent whatever, like no one's going to ask me, and you know,
Right.
it's absolutely mine.
Yeah.
That's really interesting.
Yeah. It
What-
doesn't mean we don't talk about big purchases. Like she
Yeah.
wanted to buy this huge dining room table. You know that one, yeah?
Yeah.
And, it was it's like, well, we haven't spent that much on furniture ever before.
Yeah.
Because she wanted, and it's like, oh, yeah, okay, we kind of clear it,
Yeah.
But there's no like approval process. You don't have to fill out a form.
And how did your folks, because you said even your folks had a joint account, how did they tell you, how did you know that they had a joint account?
I guess maybe, I would have just expected that. Yeah, sorry. Like I
Yeah.
went, yeah.
I mean, do your kids know that you guys have a joint account?
Jeez. I don't even think it's on their mind about
Yeah.
what the nature of our
Of your
bank
financial-
account mandates.
Yeah.
Yeah, I just don't think they know.
Because that must also
Yeah.
be really complicated then when you are separating, because, and I just mean
It's
that,
true.
Yeah.
No, I mean, yeah, that's right. That's right. Yeah.
And I don't even mean
Well,
from
yeah.
the from
I
split,
don't plan
split,
to I don't plan to separate from my wife. So that's,
and I don't even
I've
mean
got
from
that
the,
one
from the
solved.
process of splitting things in half. I just mean like even in the process of separation, because that takes a while, right? It can take a year, it can take whatever.
Yeah.
So in that period, what are you doing? Like how do you function?
Oh yeah, I actually don't know. I mean, I don't
you
even
wouldn't
know.
even know. That's
Yeah,
crazy.
I mean, I'd imagine during divorce, I bet that people start to set up their own private accounts
Yeah.
and try to figure out how to scoop the money over that way.
Yeah.
I hope never to be in that situation.
Oh,
my
I
God.
hope you're never in that situation.
I'm just never. I will not ever be in that
Yeah.
situation. So
Okay.
yeah.
Fascinating
Yeah.
turn of events there.
No
Anyway, so you go to the UK to do your masters, right?
Yeah.
And you meet the founders of KopoKopo.
Yeah, the guys,
M-Kopa.
guys who I founded
Yeah.
M-Kopa with.
Yeah.
Yeah.
So what's that? Maybe you can tell us a little bit about the guys who you met and how this process even came about of M-Kopa. Sala.
Yeah, well, I mean, first of all, I'd say like in the master's program at MBAs now, like they really promote entrepreneurship, right? Like they're sort of, among other things, they're training on kind of accounting and statistics and things like that, but they're also really trying to push people to start businesses.
Yeah.
This is maybe 30 years ago would have been different, but today it's like that's one of the big things.
Yeah.
They teach you about venture capital and all this stuff. And so I hadn't thought about starting a business before, but these two guys really wanted to do it and they needed a finance guy and they were encouraging me to do it. And I thought like, well, what's the harm? Like, what's the worst that can happen? And I mean, I was lucky I had money saved from Wall Street, right?
Yeah.
So that allowed me to basically take the risk of like, what's the worst that can happen? After a year, we don't get any traction. I move back to the States. I go work for a hedge fund or whatever I might do, right?
Yeah.
In banking, right?
Yeah.
And so I thought we'll take a shot at it. It'll be interesting and I'll learn some stuff. But then it worked out. We ended up
Yeah.
being kind of good at it,
Yeah.
So on execution, yeah.
Okay.
Yeah.
So you moved to Kenya,
Yeah.
with the two other guys,
Yeah,
and
Jesse
you
and
start,
Nick. Yeah.
Jesse and Nick, and you start the process of building the company.
Yeah, and a lot of that was fundraising in the
Yeah.
early days.
Okay,
It was like-
what's the fundraising process like?
Yeah, it was telling the story in the early days, and when I joined with them, they were good fundraisers. Those guys, they had already raised some grant money, and then we were in the midst of trying to raise equity, and then I think I helped them on the equity raise of putting some like financial discipline around their ideas, the way their pitch, and then we were able to raise our first 1.5 million of equity.
Okay.
In 2011, and then it went on from there. Then we were able to start business with that.
Okay. When does the NCBA loan come in? Is that after that?
Yeah, that was like I think 2013 at that point, where we took on a $10 million loan to fund our working capital cycle because, excuse me, we had to pay our manufacturers in China, before they'd ship and whatnot. So there was always like a stretch time, they call it a working capital cycle. Yeah, it's like we pay here, but we only get paid from our customers much later because. We got to get that solar device across the ocean into Kenya, into a warehouse in Nairobi, maybe out to like a service depot in Kitale, into the Mashinani and into some customer's hands, and then that person pays the down payment on the device and then starts to pay us back. So our money only comes back, 6 to 9 months later.
Okay.
So we had to fund that constantly. So we took a big loan in Yeah, I think it was 2013, $10 million
Okay.
from NCBA.
Okay. Before even the big loan in 2013.
Syndicated loan.
Syndicate. Before even that loan in 2013, I want to ask, what do you think it is? Is it about your pitch that allowed you to raise the $1.5 million initially? What is the story that you're selling? What's the thing that's compelling? That's like, yeah, we're going to give these guys money, especially considering your 3 white guys who've come
Yes.
to Kenya.
Yeah.
Yeah.
Yeah, because you got to talk about the people, not just the pitch. Like,
Yeah.
the pitch was interesting. Like, we had this idea that you could stick a SIM card into a solar device that could switch that on and off, and then you could offer it on a payment plan where people paid you 50 shillings a day or 40 shillings a day for the device, and you could shut it off remotely if they didn't pay, so their lights wouldn't go on. So it was kind of an interesting little hook. It took advantage of like sort of emerging trends in some technologies, like modems and SIM cards were getting way cheaper, so you could embed one in something of reasonably low value.
Right.
And then the M-Pesa system allowed that 50 shillings to transfer across distance with no friction. Yeah. Like at the time, I think there was even no fee. Maybe it's still the case on payments below 100 shillings. So people would pay their daily, and then it would just, the device would stay on. So, so the pitch was good, but you know, if it would have been 3 Chads, we wouldn't have been able to raise money. So you mentioned the white guys thing,
Yeah.
but those 2 guys were white guys, but also that were already networked in this kind of, I guess you could say, impact investment space. This is this space of like investors who are investing in for-profit companies, but they also have like a social mission.
Yeah.
And that was where our early money came from. And
Yeah.
those guys were really well networked in that world.
Yeah.
Which I wasn't.
Yeah.
Yeah.
Okay. So all of
As
those
much,
factors
yeah.
put together got you that,
Yeah.
the process, right?
Yeah.
Okay. Then we talk about 2013 and the NCBA loan and why that was such a big risk, because you said at the time you didn't have was it the leverage, or you didn't have the what's the technical word? I'm forgetting. Yeah, just tell us the story. Yeah.
Oh yeah. The story I was telling you earlier
Yeah.
was I mean, they surprised us at the end, and you know, we thought the company was getting a $10 million syndicated loan, but they surprised us at the end, and they asked Jesse and I to sign personal guarantees each for $10 million. Like if M-Kopa didn't pay on the loan,
Yeah.
they would chase us like jointly and severally, as they say.
Yeah,
Like
yeah.
whoever had any money that they could tie up to 10
Yeah.
million. So it sort of meant like you'd be chased forever if this thing failed.
Yeah.
So it was a big decision to sign that, but we signed it in the end, which is like, you know, I signed it because I knew the inside of the business, and I knew it was extremely difficult for that loan to not be repaid because we had such a good cash conversion cycle with our
Yeah.
customers, and it would be simple to pay.
Yeah.
But you know, it basically reminded you the skin in the game
Yeah.
that you have in entrepreneurship, I guess. Yeah.
Okay.
Yeah.
And what's your journey like, I guess, for the rest of the time that you're at M-Kopa, as I guess serving as the CFO, right?
CFO, yeah.
CFO, yeah. So what's that whole process like? What's the growth journey like? And you said now they've pivoted to something else, but yeah.
Yeah. So at the time, I mean, we really, you know, started to move large numbers of those solar units, and that was able to grow over the years. We struggled to figure out how to make it profitable. It's a difficult business. I mean, it's really complex. You're moving goods in the real world that at the end of the day are only like $200 kind of items. Like, it's the room for big margins is not really, it's difficult, right? And you're also selling to a, you know, sort of a poorer customer base, yeah? Where, you know, you can't bake a lot of margin in the product. But, you know, they've been good. They've been able to convert to financing of smartphones, which actually is like, does have positive, or the opportunity for positive margins if managed correctly. So that's what they're up to these days. That happened after I left.
Yeah. And by the time you left, had you been able to figure out the profit, make it profitable, or was it still?
Yeah, when I left in 2018, I was kind of giving up hope that we would make the solar product profitable. You know, that was part of the reason for my departure, is like, I didn't want to just fundraise forever, right? Because we had to fundraise constantly because the product wasn't generating margins. Yeah.
And sorry, and I just want to ask
the solar product.
Yeah.
Is, yeah.
I'm just asking, what's the thinking behind that then? I mean, because that was what, six years in, was it?
Yeah, it was like 7 years in.
7 years in. I mean, so you come up, you have a fantastic idea, and yeah, you go and you're able to raise money, able to get money, get a loan, get lots of things, but you're just not able to figure the profitability of this
Yeah.
company. What's
Yeah.
that for you as a CFO, one, and then just as a process of being a founder of a startup company? What's that like?
Yeah, that's the thing. It's like you have an idea, you have a hypothesis that this thing could be profitable. You've obviously built a model and figured out, okay, we're going to pay this much to the supplier of the solar unit. We're going to pay this much to Fargo Courier to move it around into warehouse it. You kind of build up your costs.
Yeah.
But then you have your plan, and it shows on a spreadsheet that you have good margins. But like, what's the Mike Tyson quotes? Like, everybody's got a plan until you get punched in the face.
Yeah.
You go out and you find like a bunch of your assumptions are off, and it doesn't cost you, basically $6 per unit to move it from Nairobi to the customer's hands up in Bungoma. It costs you $18 per unit because there's a bunch of middlemen that need to be paid and things like that.
Yeah.
And all of a sudden it's like, then we're priced wrong because we have it. But then you don't have pricing power because you're already priced in a way where the customers are really struggling to pay it. So you don't have the option. You don't have pricing power.
Yeah.
This is the thing. Not everything works. People test new business models. They see if it, like somebody opening a new restaurant with a new type of cuisine. They don't know.
Yeah.
But you have to do it to know. We had our assumption if we raised money, there was risk, and then for me it was just like it didn't pan out. We tried everything we could to figure out how to get the costs to reconcile, but there's some things that just don't
don't work.
Some business models just don't work no matter how much you want them to. You could have a business model that you're going to sell 10,000 iPhones in Dadaab, but it's not going to work. It's like you could wish it would work, but it's not going to work.
I have three questions for you on that. One, so as you keep raising money within these 7 years, do you have to keep twitching your pitch for the new investors? And as you're twitching it, do you actually believe what you're telling them, or are you just trying to raise money to be able to pay people and keep paid and keep your job and all of that? And is there ever conflict with your conscience at some point? Because if you're saying I'm not seeing this thing working, but then you're just heading into another pitch to try and raise money. Yeah.
That's sort of you need a new pitch each time because you've lost money, right? So you need like a story of how that's going to cure. Right? Like the future is not going to look like the past, right?
Yeah.
But the more times that you do it, the less credible that story becomes, right? It's like it's like you're always 18 months away from profitability, and you've been 18 months away from profitability since 2011, right? And so, so you need sort of a new story, either like on basically new initiatives that you think are promising that'll reduce costs, or some new product or some new territory. Like new territories was always a good fundraising pitch. We're going to open in Tanzania now, and you're right. Like the best fundraisers, or at least for me, like when I can fundraise best is when I totally believe what I'm saying to that investor. Like I completely believe exactly what I'm telling them, because they can see it on my face if I don't believe it, right?
Yeah.
So I became a less effective fundraiser over time for that reason. Yeah. And part of the reason of leaving the company in like 2017, 2018 is like they were going into a big fundraising round, and I kind of decided I didn't want to be involved in speaking to investors in that round, which is a strange thing for the CFO to do, right? So it was like, okay, that doesn't really work. I think you have to leave the company at that point. So
anyway,
but it's a great company. And they've really cracked it now. They've got a great product with the phones, and I'm happy that happened. That is none of my authorship. That's all them.
When does your come to Jesus moment in that sense? Is it gradual, or does it come overnight where you wake up and you're like, you know what, I'm done?
No, it was gradual.
Yeah,
it was gradual.
Yeah.
And then, it always helps, like with those things that come on gradually. Sometimes if you take some time off, like all of a sudden those thoughts can crystallize better.
Yeah.
So I took a few months off to think about like what was going on there, and then I was like, okay. Yeah. So.
And
but it's hard. I still feel like M-Kopa, that's my baby,
Yeah. So if I'm to ask you about your financial pressures or financial considerations during that period, because you said when you moved here initially you weren't getting a salary, right?
Yes.
So at
In the
what
early
point?
days,
At what point do you then? What year or at what point do you then get a salary? And then even at this point, when you're considering at the end of the journey, when you're considering leaving, what are the financial considerations at that point around? Because I guess your kids are here, your kids are in school here.
Yeah.
So they're no longer well, they're not in a U.S. district school where now you have to pay fees.
Yeah.
Among other things, among other considerations. So what are the financial things that you're thinking about at that point?
Yeah, I mean, again, I think I'll be living off this Wall Street money for the rest of my life. Like, it still was basically the quitting there and losing that income because we were making a good salary at that point.
Yeah, yeah.
In the early days, we got nothing, but then once we started to have some success, the board like gave us like good raises and whatnot, the investors that were on the board. So, but yeah, I was lucky that I could just quit without knowing what I was going to do next.
Yeah.
I mean, I knew it was easy for me to make money at that point because it's like, as soon as I left, like a bunch of consulting opportunities, people would come and ask me, "Can you help? Can you come in this position?" So I knew if I wanted new employment that was paid, I could pick it up like that. But
Yeah.
I was lucky. I still have and had this savings from that time on
Yeah.
Wall Street that will probably.
How much money did you make on?
They paid me too much, Barrack. It was. I mean, it is ridiculous. It was a good time.
Yeah.
It's kind of like when I think back to that. First of all, I think I was pretty good at it.
Yeah.
Probably better than most at doing math in my head and being able to trade the bond market and make money. But like it was also just a great time. Like if you were in that space from when I started to when I left, it just like the market naturally. And then in 2008 when it blew up, like all that money disappeared, right?
Yeah.
But I was there for the part where everything was making money. So yeah,
So
they paid me too much.
Yeah,
way too much.
They pay. You mean?
Yeah.
I mean, because that was what 10, 15 years later, right?
Later
I mean,
than
by
when?
the time. I mean, by the time.
Yeah.
By the time you're leaving.
No, I mean that
that's
money
10,
is like
15
going to last me the rest of my life.
the rest of your life.
I think. I mean, not if I. I still want to earn some money. I need to earn some money.
But like you're
Yeah,
you're
I'll
like
have some of
that,
it kicking around.
What is it called? There's the guy on.
I'll not be able to spend all of it.
Really. I need to know how much money this is, guys.
I mean, I could spend all of it.
Maybe that's why he has a joint account.
But with the lifestyle I have, it'll be fine. It'll be fine. Yeah.
Like so, right now, you're telling me right now, if
This sounds really. This sounds like I'm talking about how rich I am or something.
no, not really. But I mean, if you stop working right now,
I'm gonna get flamed in the comments.
yeah,
This is
it's
pretentious. This is
I mean,
pretentious.
it is,
yeah.
it is what it is,
Yeah.
So if you stop working right now, right?
Yeah.
Like you'd be fine, basically.
For a very long time.
Oh.
Yeah, I've got.
That's a really good
I've
place
got
to
three
be.
kids.
I mean,
I've got three kids
yeah.
though, and like it depends on like if do I have to pay for some of their stuff as they get into university. I'm not like that. I'm not sure about yet. I'm not sure what they're doing.
Oh,
Yeah.
that's a really good place to be either way. I mean, financially speaking, that's a really good place to be. But okay, so I guess we know that you have this nest egg from Wall Street that
it was lucky.
essentially,
Yeah, I was in the right place at the right time.
Sorted, right?
Right place at the right time, and I had a decent skill set for it.
Okay.
So
I want to get into.
I know I don't deserve that money.
Yeah.
I do know. I do know that was complete like dumb luck. Yeah.
Okay, let me
I do
ask
know
you
that,
then. In terms of even raising capital for the business when you started, right? And you were three white guys who are coming in. Do you think? And this I asked you before we spoke. Do you think that if it was three Africans or three black guys who were coming in, we would be able to raise the same amount of money that you raised?
No.
Yeah.
No, I don't think so. I don't think they'd be able to raise money at all, because the minimum scale, like it wouldn't make sense to raise. You couldn't start that business on $200,000. You'd need that $1.5 million, and nobody would give three Kenyan guys $1.5 million if they had no.
Yeah.
I suppose it would depend on their track record.
Yeah.
Like conceivably, you could have three Kenyans, and one of them's been living in Washington D.C. for the last 10 years, working at the World Bank, the IFC part of the World Bank, some investor.
Yeah.
And another one's been working at Google and was part of their team that built the blah, 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 right?
Yeah.
Like maybe those guys could then go raise money, right? Yeah. Just three guys that haven't left Nairobi now aren't going to raise the money. Same idea, same pitch deck.
Yeah. I mean, because I guess
they won't raise the money.
We were sort of mentioning it and talking about it, and we were talking about how, for a lot of all these startups, you'll see there's the African guys and there's a white guy, in the picture at some point, and in some sort of leadership position
Yeah.
within the company. And I guess I wanted to ask your experience and your thoughts around, I guess the white privilege when it comes to raising money and the ability to raise money, and what it does for you to have, whether it's a white person on your board or white person on your founding position, or even if it is like you said with three white guys who came in to create an African solution, and being
Yeah.
able to raise money for that. Yeah.
I mean, yeah, it's because I wonder, because I wonder like why this is the case, and I don't think it's I think it's somehow it's thought that these white people are not going to scam us, like they're not going to take this money and shoot out the other side because they care about their global reputation too much. They're sort of in this global class, like they could be working in London or New York or Nairobi, and like if they get the reputation for running off of the money, they'll destroy that. So there's somehow like you have like a good social credit score somehow. And I don't know if it's the white skin or the like internationally thing.
Yeah.
Do you see does that make sense?
Yeah, I guess it does. I mean, I think it's unfair among many other things, but well, not unfair. It's just not right, But I mean, the fact that it's a little bit more difficult for me to be able to raise money than it would be for you to be able to raise money for
Yeah.
a solution in my country for my people. I mean, it's yeah, it's
It's
just,
strange, man.
Yeah,
I mean, how much of the international like impact capital that has come into businesses in Kenya has gone to white founders? Like, if you measure it by dollars, it's like it's going to be some huge percent.
yeah.
80 it's got to be 80% plus.
Yeah. I mean, I think, like, I was telling you, my first interaction with a poor white person was in the States, and I saw, you see a person walking on the streets and he's, homeless essentially, and you then realize, oh, actually, yeah, there are poor white people. We were discussing this before. We were talking about how the expats, I think it was last year, voted Nairobi as the best place to live. And I asked you if you know any poor white people in Nairobi.
Yeah, I don't think so.
And you said, no, you don't know anybody. So I mean, the standard of life that you're living here is rather wealthy. It's well off. It's a good standard of life for the
It's
average
true.
white person in Nairobi. And I guess I don't know. I don't know what needs to change or who needs to get but something needs to change, to some respect, I don't know.
What do you think needs to change?
I don't know. I'm not sure. I don't know if it's like our perception, or our ability to give Kenyans, black people, more opportunities within our own countries. I don't know whether it's a trust system. I don't know. I don't know what the thing is, but I guess it would be good for me to be able to raise money as easily as someone who's coming in from Washington, especially for a solution for an African business.
Yeah,
Yeah,
that's true. How do you think we do it?
I don't know.
Yeah,
I don't know.
This is the hard part.
Yeah,
Yeah.
Collins.
It's a weird.
I don't know.
It's a
I don't
weird
know.
look, though, of some
Yeah.
of these impact investors. I think that like they seem to only back or substantially back, like elite white children.
Yeah.
It's like these are often people really privileged. These whites that are coming to start companies here are like, if they didn't do that, they'd go work at McKinsey or Goldman Sachs or something like
Yeah,
that.
yeah.
These are people who will do just fine. Right?
Yeah,
They don't
yeah.
need money. They don't need money thrown at them to
Yeah.
fund these solutions. I'm surprised that the impact investors like tolerate that look. That they pretty much back white founders.
Yeah.
Yeah.
What do you love about, I guess, living in Kenya? I mean, besides the job that's kept you here and the fact that you had been I guess, founding member of a company, like what else has kept you in Kenya? What have you enjoyed about it?
I mean, the thing that just is the most satisfying now is I've got this team of people at KopoKopo who I really like, and I feel like we're all pulling the same direction, and they're all smart, they're all fun, they're all. I mean, it's just like that's the squad, and that's what keeps me going. It's like I just love that. It's the
Yeah.
people, yeah.
Yeah.
It's the experience of running the business with my team.
Okay.
But it's a good lifestyle here too.
Yeah.
Yeah. Climate's good. Nairobi's got lots of amenities. Huh? You can get sushi if you want.
Yeah.
Yeah.
So it's like it's a
You
good
got all
mix
the
for you.
things.
Yeah.
Yeah, exactly right.
What are
It's
you-
not a hardship position.
What are you teaching your kids about money right now? Because you know, I guess when you're talking about if you stopped working and you said you weren't sure whether you're going to pay for your kids education further.
Yeah.
So is that something that you genuinely do? Like you wouldn't pay for their university fees and you tell them, yeah, go get a loan the same way I did and figure it out for yourself.
I'd like them to take like lots of responsibility of their financial choices. Like they can't just pick. Like, you know, I understand I might need to help with whatever down payments or things like that, right? Like on a crappy car or something like that, you know. But I think they've got to. I don't know. I mean, I think that lesson for me is just where the parents were not going to give me any money. They weren't going to be able to help with college, so I had to figure it out myself by working and taking loans, you know, and filling out all those applications myself and figuring out how to get it done. Like,
so you'd like them to go through the same journey?
yeah, I
essentially?
would. Yeah.
Yeah.
Like if you want to go to college, good. You go figure it out.
Yeah.
Right.
And would that be college here or college?
Wherever they want to go.
Yeah, like
It's their choice.
Like you figure it out.
Yeah, exactly.
That's interesting. I mean,
Yeah.
so there's no Kenyan nest that's worn off on you in one way or another. Because like I mean, my folks didn't tell me go figure out. For them, it was
Really?
I'm gonna pay for your education up until university, and after that, you figure it out.
Okay.
Yeah,
I
but it
see.
wasn't after high school. Like yeah, we're done.
I see.
Yeah.
Yeah. I mean, I will help out a bit, but like they've got to have real skin in the game, right?
Yeah.
Like anything they're doing, they should be taking sort of having financial skin in that game. Like,
Yeah.
that's fine. You want to go take guitar lessons, like you're paying for it yourself. Go get a job and then figure out how to pay
Yeah,
for those guitar.
but I mean, again, go get a job for you was different from them.
yeah, that's the problem.
here,
My parents were
right?
genuinely broke.
Yeah.
Is why I had to do it. Like
No, but
they
No, I
know
mean, yeah.
that I'll bail them out in the end, right?
no, I mean, I think there's that, but I think there's also, I mean, if they live here, if your kids live here, there's a fact that, yeah, you're not gonna go and work a part-time job and make minimum wage.
Right.
You know,
I mean, there's just not even the opportunity.
No, it's not there,
Yeah.
no.
Yeah. Or I think it's against the law as well, like for under 18.
yeah.
Yeah. So do you have
Okay.
kids?
I have 2 daughters. Yeah.
You have 2 daughters?
Yeah, but they're not nearly at the level of thinking about them, figuring stuff out.
Yeah.
They're not toddlers. They are
Yeah.
what's like a preteen, and an 8-year-old.
Right.
Yeah,
Okay.
and for them it's like pocket money. Like those are the lessons I guess at the moment that
Yeah.
I'm trying to pass on right now. Yeah.
Right.
Yeah, nothing too complex.
Do you have them watch your podcast? Say, watch this. Learn about thinking about money.
I don't know.
Yeah.
I don't know.
All right.
I don't know. Anyway,
Cool.
okay.
Anyway, but you're right. I mean,
Yeah.
obviously they're growing up in like an experience of like extreme privilege, right?
Yeah.
Like with the lifestyle we have in Nairobi, it's just, it's not something that. But I don't know what to do about that. But for sure, that's going to shape their views about money in the future,
Yeah.
right? Like I'm not naive, right? Like
Yeah.
I know that I can't just like replicate my childhood onto them. I do know that. Yeah.
Do you plan to die here?
I think I probably will. I can't
Yeah.
see a circumstance where I'll leave this country. Yeah. Like I'll want to keep working on stuff, and like I want to keep working on projects and like business ideas maybe, or and like with some of the people I work with now that I like picture working with in the future. you know?
Yeah.
Yeah.
So like
Kenyans,
this is now I guess.
yeah, like my crew is all here.
Yeah.
Like the people who know how to get stuff done that I know are all here. Yeah. So if I've got some project and I need people for it, this.
Yeah. Okay.
I,
So what do you
I,
have?
I know how to find them now.
So what do you have left in other? I mean, do you have any other liabilities or anything in other countries, whether it's the UK or in the States or
Liabilities. No, I don't have any.
No,
I don't own property or.
in any of those. So
Any of
it's-
those places,
everything is
yeah.
absolutely here.
Yeah, and my parents have both passed in the last like 4 years, so it's kind of like
Oh,
my wife's parents are around,
yeah.
and my stepmom is.
That's
around.
really interesting. And I'm going to ask you an obscure question.
Yeah.
Because I said you want to die here. So, I mean, like, I know based on my culture and everything, I mean, if I passed, I know exactly where I'd be buried. Or if I want to
Yeah.
be cremated, I know what happened.
Yeah.
What will happen to you?
I mean, I thought that's a good. Somebody asked me this, who
Yeah.
asked me the same question. Yeah, I can't picture like Langata Cemetery somehow. I don't know. I
Yeah.
don't know. Maybe cremated and like spread on Gong Hills or something. I don't know. I
Yeah.
like that place.
Yeah.
That I find a very peaceful place. That'd be cool.
Yeah.
Yeah.
That would probably be your way to
Something like that.
to go.
Yeah. Yeah.
It's interesting.
What about you? Where are you gonna be buried? You're gonna be buried.
I don't know. I've thought about being yeah, same cremated, tossed in the ocean maybe.
Oh yeah.
Cremation
is not common here though, right? Or among yeah.
No, it
It's
I
becoming
know
more
a few
common.
people. Yeah, I think it's becoming more common. Yeah, I think it's becoming more common now.
I had a friend whose
Yeah.
father passed and was cremated, and I felt like this person felt like they had to defend the
cremation.
yeah.
Yeah.
And when like there's no, you don't have to defend it. Like everybody has their own choice.
Yeah.
What do how can I say?
I think it's getting more popular now.
Yeah.
I think
I see.
I know 2 people.
Yeah.
Who've been cremated.
Okay.
Yeah. So I think it's definitely getting a little
Right.
bit more popular. But
Yeah. Yeah. I mean, for somebody like me, I don't have any shags. Like I don't have.
yeah, that's what I was curious about. I
Right.
was
Yeah. Yeah.
Like what would happen? You
Yeah.
know?
Yeah. Right.
And
And it's not like it's not like I grew up on a farm back in
Yeah.
Minnesota. I grew up in the suburbs, and just
Yeah.
like like the South B of that area or whatever.
Yeah.
Right?
Okay.
Right.
So I guess looking into the future, what does financial failure look like to you? Like if you fail, because now we know that you have this super nest egg almost, right? So
Yeah.
what would failure look like for you? I mean, what would need to happen for you to have failed financially and say, okay, yeah, I up until X I was good and then I completely messed up after that.
Probably like me developing a gambling problem suddenly and squandering a bunch of that money.
Yeah.
That would be I would say that's a failure.
Yeah. Okay.
I can't think of what else. Even if I like put it in on a business venture and lost most of it and had to work, I wouldn't see that as like a failure, right?
Yeah.
Like imagine like I do basically just bet the farm with the remaining nesting
Yeah.
on one
Yeah.
idea and it loses it. Like I'd still be able to get employment, like paid employment. Like my kids would eat, yeah?
Yeah.
Right. I'd do fine.
I mean, that must be, I guess sort of wind up, but that must be like a really comforting thought or place to be where you have an amount of money or a nest egg that basically allows you to do whatever you want to do.
I mean, I can't buy Equity Bank.
No, I mean, yeah, but
I can't do a
know.
hostile takeover
Yeah,
of KCB.
Yeah.
Like some people have that kind of money, right?
Yeah,
You know what I
yeah,
mean?
yeah.
Right. Elon Musk bought Twitter
Yeah.
for whatever reason.
Yeah.
I'm lucky. Yeah, I mean, yeah, I don't know what to say about it. I feel like we've talked about this way too much. It's going to look like there's going to be haters. There's going to be haters upon haters of this conversation.
No,
This part of the conversation.
I'm actually just asking about, because I think about, because I mean, we work to make money to be able to live a good life, to lead a good life, to feed your kids, to do this. So, and people say, and then there's certain situations where you're working where you might not particularly enjoy, but you just have to keep doing it because of what it means, because of being able to get money. So I'm just looking at the comfort and the privilege of being able to be like, you know what, I'm okay. And the allowance to do whatever you want to do.
Yeah, I mean, listen, I'm grateful, and I know, like I said earlier, I know I don't deserve it. That I sort of stumbled into it. I could live 20 kind of similar lifetimes and never be in the same position and have that not happen, right?
Yeah.
Be the same person, right? So anyway, yeah, I'm grateful.
Okay.
Yeah.
Biggest lesson on money. I'll just end on that. What's your biggest lesson on money that you've learned in your life so far?
Well, one thing I think I did, not by intention, but when looking back, was like a good decision is when I started making some good money, I invested a lot in experiences. Like I upped my lifestyle intentionally. It's like, okay, and traveled more and met different people and met like people I wouldn't meet in my day-to-day life and things like that. And I think like when you're young, for young people, like some of them are, I always find it strange. Like you find a 25-year-old that's, in salaried employment and they're trying to save $10,000 a month or whatever. It's like, no. Take that 10,000 and like go on a trip with like a group of your friends or like a group of different people, like invest in those experiences earlier. Because that's like those experiences when you're young just shape your, they kind of shape your personality.
Yeah.
Yeah. And exposes you to a new network. Hopefully you get away from your cousins and the people around the estate and get out and meet new people. Yeah.
Yeah.
Like that's it. That's a good investment. You know, setting aside 10,000 on some land purchase, whatever. If you're 25 years old, doesn't make any sense to me.
Yeah.
But that's just me.
Okay.
Yeah.
Well, I mean, you don't even have land now, so.
Huh?
I'm saying you don't even have land now.
No, I don't.
Yeah, so
I'm,
it's
a
like
landless peasant.
Yeah, that makes sense. Anyway, okay.
Yeah, cool.
That was a really interesting perspective. I'm trying to wrap my thoughts around the conversation we've had, because from talking about, I guess, your journey here, talking about, I guess, how you handle your own finances, and I guess whether it's a privilege and different things that we've had, and I just think it's a really different perspective from what I've heard before, and hopefully what the listeners will have heard before, and hopefully it gives like just a different, almost like exposure and awareness to like, yeah, there's another way that this money thing can go. And I mean, we've had someone who had told us they were extremely fortunate and had a windfall and won some money, or not even won it, got some money on via a TEDx experiment. But yeah, I mean, I haven't had someone before like who's had your context, and yeah, so definitely just a different perspective. I think we'll definitely see on
Fantastic.
how we can make that.
It was fun.
A bit more. Yeah.
Yeah, I enjoyed
Yeah.
it. Yeah.
All right, guys. We will see you guys on the next episode, and we'll watch out for your podcast when it does come out.
Yeah. No, not yet. No, not yet. Not
Is
yet.
it us name anyway?
No, we're not ready to promote
We're not
it
ready to promote it yet. Anyways, when it's out,
we got a few episodes in the can, as they say.
What is it about, though? Can you tell us?
It's
what
just,
about?
I mean, it's everything from like current events. So like we will talk about business stories.
Yeah.
It's me and two Kenyans. We'll talk about business stories, and we'll talk about stuff that's trending on Twitter, pop culture. Like it's a little of everything.
Yeah.
So sometimes we'll go deep in like an actual like business. So it's like educational, but it's light as well.
Yeah.
Yeah.
Okay.
It'd be more fun if I could like actually promote it now, but it's not ready.
When it is, we'll
cool.
promote it for you. Yeah.
Cool.
Collins has
Awesome.
said so.
Cool.
Although I've made him say so, but it's fine.
Awesome.
Anyways, we'll see you guys in the next episode. This was Financially Incorrect.